Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 9th of August 2020, and yesterday we published our Gold and Silver Weekly Update for the week ending the 7th of August, where we highlighted that gold rose 3% last week to end the week at $2,035, and silver rose 16% to end the week at $28.33. And of course, we're being asked, where do we see silver and gold heading from here? Well, firstly, we have to say that to try and make an objective assessment outside the normal parameters of supply and demand, and technical analysis specifically for silver, because we have not entered into this fray for a serious number of years, is practically impossible. There are now so many imponderables and frankly emotional actions by politicians, central banks, investors and the public at large. There is no financial model that can accurately calculate with any distinct degree of precision as to where the silver price could be headed. Now we shall hear in a moment or two how demand for physical silver is down in India, one of the largest global importers, and this demand is expected to continue to fall. We will also hear that the industrial demand for silver currently, though higher than the worst fears had us believe, is still significantly down. In a previous video, we highlighted that there was also a very clear move of both gold and silver physical demand transcending really from the east towards the west, particularly in recent months. Though we do suspect that as China's economy picks up, this reversal may stop and reverse yet again. But this will, of course, to some degree be predicated on political relations with China and the West over issues such as Hong Kong, the coronavirus, intellectual property rights, and not to mention human rights. All that said, what has driven the silver price up, without a shadow of a doubt to the levels that we're now seeing, is the demand particularly via ETFs, futures and to some degree physical, particularly in the West, and also through organizations like Bullion Vault or similar, who allow you to purchase gold and silver and other precious metals and store them offshore on your behalf. In fact, it's been reported a number of times recently that silver investment demand is exploding. American stock traders have flooded into SLV shares in recent months, vastly upping their silver portfolio exposure via the world's dominant silver ETF. Another reason for silver's rise obviously has been the rise of gold prices, and silver tends in the main to follow gold, not exclusively, but certainly more than the average. But the gold to silver ratio seriously went out of kilter earlier this year when it exceeded 125 to 1. Normal rates have tended to be around 80 to 1, and taking a longer-term average closer to 60 to 1. The dollar fall has benefited precious metal prices too, and of course the fall in real interest rates perhaps has been the catalyst that ensured silver has attracted more serious investors of late. Rates falling because of central bank stimulus to aid the global recession, primarily caused by the coronavirus pandemic. Now let's also bear in mind the silver market is tiny compared to the gold market and many other commodity markets. With around 900 million ounces a year being mined, you can see that 1 year's production, even at today's prices, represents just some $25 billion. Chump change for the likes of a Warren Buffett or a Jeff Bezos, who could, on their own theoretically, buy up an entire annual supply of silver with their own money. So God forbid, if major investment houses become seriously interested in the precious metal, the price could, theoretically at least, go anywhere. Now the fact that it doesn't, and that it has held generally within relatively modest, if not tight parameters, must suggest to all of us that not everyone holds the same level of silver fascination as we do. That said, we do not need too many to follow in our path to have a significant impact on price. Now, we have stated for literally years that the only real environment that would push silver prices up anywhere near to previous highs and potentially beyond would either be a significant black swan event or financial investors moving into silver for monetary purposes, whether it be hedging or currency protection. So many so-called gurus were telling us about industrial demand, solar panels, medicines and the such like would cause silver to skyrocket anytime soon. And frankly, we always discounted this, and in fact thwarted this to some degree, because we could relatively easily equate the size of those markets and compare them with existing supplies and future mining of silver, and the figures just never ever stacked up. Yes, long term these will have an influence, there is no doubt, but not short term. And this, we believe, has proven to be the case. The flight to silver has not been because of some great invention demanding the entire global supply of the stuff, but investors wishing to both hedge their monies against devaluing currencies and against potential future inflation. And silver, more recently, has been seen as an overlooked asset deserving more attention. It really is as simple as that. Now, longer term, the industrial demand will have a positive effect, and this is why we stated back in 2019 that the 2020s will be the decade for precious metal prices, and particularly silver. And our best calculations were that the serious rise would occur sometime between 2022 to 2025. Of course, prices would rise slowly prior to that. Now, maybe, time will tell, we've been out a year or two. But who knows? It's not all over yet. So let's just take a brief look at a few articles we believe are worth noting. The first is by Bloomberg, highlighting the situation with regards to India demand and pointing out that the Bank of America has predicted $3,000 gold and $50 silver. But before we get too excited, not quite yet. The second, as showing from rmegold.com, pointing out why $50 silver is a reality, but again, let's look at the time frame. And the final video showing various forecasts by other institutions and where they believe silver prices could actually lie in the next few years. We shall play these back to back and then make a brief comment thereafter. Bloomberg article dated August the 7th, 2020. Headline: Silver loses shine in top buyer as prices rocket to record high. Silver consumption in India is set to halve in 2020 as buyers, mainly from rural areas, skip purchases amid surging prices and a weak economy. Imports by the world's biggest consumer may tumble by as much as 50% this year, from about 6,000 tons in 2019, according to Chirag Sheth, a consultant at London-based Metals Focus Limited. Imports were down by nearly half in the first 6 months of the year to 1,735 tons, he said. Silver prices in India have rallied more than 60% this year to record highs, as bullion gets a lift from declining real bond yields, a weakening dollar, and chronic uncertainty over the global economy. That, combined with the hit to the economy from coronavirus-related lockdowns that shuttered businesses, resulting in millions losing their jobs and curbing demand for the metal. Silver fundamentals remain weak due to low industrial offtake, according to Harish Gallipelli, head of commodity and currencies at IndyTrade Derivatives and Commodities. However, prices are up, tracking higher gold prices, and it's purely investment demand driven at this moment. Silver jewelry demand, which comprises more than a third of total consumption, may drop by as much as 25%, and silverware usage by 30% to 40%. Sheth said, Nearly 2/3 of India's demand for precious metals come from the rural parts of the country, as they are considered as an insurance against bad times due to a lack of good banking infrastructure. If you look at the market post-2011, for a few years the rural consumers just went away, and they did not buy any silver because of higher prices, Sheth said. We have to see if the same trend plays out this time as well. The country imports most of its silver from places including the United Kingdom, mainland China and Hong Kong. Locally, Hindustan Zinc Limited produces about 600 tons annually. Article published by rmegold.com. Headline: Bank of America predicts $50 silver. Quote, one of America's leading banks now says silver could be headed to $50. It's not the forecast itself that surprises us. After all, silver has been at $50 twice, in 1980 and again in 2011. We don't think silver at $50 is a stretch at all. We think that it is a rather modest forecast. After all, since the dollar is losing value all the time, like a ruler of 12 inches last year, 10 inches this year, and 8 next year, we have to ask, what is today's equivalent purchasing power of $50 in 1980? Well, it's more than $153. In other words, a forecast for silver to reach $50 soon is still less than a third its real all-time high. But we want to make sure the record is straight and not misleading. Silver reached a high of $50 in 1980 under very special circumstances. That was when the billionaire Hunt brothers, along with some other international players, were trying to corner the silver market. That drove silver higher than it might have otherwise gone, so we want to give you a better comparison. Silver came close to $50 again 9 years ago. So in real purchasing power, or what economists call constant dollars, silver would have to reach $57 today to equal its 2011 high. Now, Bank of America, the nation's second largest bank, writes that silver could rise to $35 next year and rally to $50 in the medium term. Bank of America has been surprising the markets with its acknowledgement of the precious metals bull market. In April, Bank of America, the nation's second largest bank, raised its target price for gold from $2,000 to $3,000. It said then, as central banks and governments double their balance sheets and fiscal deficits respectively, we have also decided to up our 18-month gold target from $2,000 to $3,000 an ounce. Another important point to remember, according to the report, is that just as central banks are socializing risk in financial markets, governments are increasing their spending like never before during peacetime. Fiscal spending plans across developed economies are nothing short of breathtaking, whether we look at them in dollar terms or as a percentage of each nation's GDP. The Federal Reserve can't just print gold like it can dollars, Bank of America concluded. We couldn't have said it much better. The bank's call for higher silver prices rests not just fiscal and monetary grounds. Its analysis takes note of so-called green initiatives in Washington, which could drive new industrial silver demand, especially for solar power applications. Bank of America writes, the last time this happened between 2006 and 2011, the precious metal rallied to $50 an ounce, a price we would see within reach this time around as well. An interesting article published on July 17th by Scottsdale Bullion and Coin. Headline, Is Silver a Good Investment Now? See What the Experts Think, by Steve Rand. Now, if we scroll down here, Steve does say silver is a good investment and it will continue to be in 2021, while all eyes are on gold. Many experts think silver may prove to be the better buy in the medium to long term, which is something we've said. Short term, we've always felt it was gold, and then gravitating towards silver. Now, July 15th, silver was $1950 an ounce. Now it's been as high as we know, from anything from $27 to $29 or more than $29. He then says, how high could the silver price go? Remember 2010, when silver prices jumped from $17 to $50 an ounce in just 9 months. It could happen again within the next 3 years, say analysts. So, let's have a look, because he's done a very interesting summary. Headline here, Silver Price Predictions 2020 to 2028. Expert predictions for when silver prices could hit $50 an ounce vary from 2023 to 2028. But the consensus is prices will keep moving higher and higher, making now the time to buy silver. Here are the predictions. Scotiabank. Silver price forecast $23 in 2020. Back in January 2020, before the pandemic shut down precious metal mines, Scotiabank analysts thought the global supply of silver is fundamentally oversupplied. Still, they foresaw investor demand for a currency hedge driving gold and silver buying, estimating silver prices to rise as high as $23 an ounce in 2020. For those of you who listened to our forecast, this was the sort of limit that we felt silver would go to this year. It has obviously gone further than that. But it's interesting when you compare our predictions with others. The Economy Forecast Agency, using mathematical and statistical methods of prediction based on existing historical data, the Independent Economy Forecast Agency predicts the price of silver to close at $18.47 in 2020 and $19.41 in 2021. And that was roughly where we thought it would actually end. We thought silver would go up to 23, but would actually end the year around this sort of figure. Investing Haven. Experts at financial forecasting firm Investing Haven expect 2020 to be mildly bullish for silver, with prices reaching $22 an ounce. By 2021, they think silver prices will turn wildly bullish, breaking out to $28 an ounce. Factors influencing their silver price outlook include a soft dollar, rising inflation, and strong gold prices. Chancery Asset Management. And this is under the heading of Silver Bull Market 2023 to 28. Predicting the central bank's out-of-control money printing and government stimulus packages to trigger inflation, Poop and Dahl announced the most violent bull market is here, and it will send gold prices to $5,000 an ounce and silver prices to $50 an ounce in the next 3 years. Please note that. Investing Haven now in an outrageous bull market, citing its analysis of the longest silver price chart of 50 years, Investing Haven analysts indicated the bottom pattern forming for silver prices from 2011 to present is a minified version of the pattern representing silver prices from 1979 to 2011. Based on this chart analysis, they predict silver will reach $50 an ounce in 8 years. First Majestic, and we all know Keith Neumeyer. Neumeyer has long held that $130 an ounce silver is a realistic prediction for future silver prices. In fact, he's gone as far as to predict future prices near $1,000 an ounce. For those who've listened to our previous videos will note that we forecast that Mr. Neumeyer's mines, every time the price of silver went up something like $1 or $2, meant literally extra millions of dollars of profit for his business. So why wouldn't he try and talk up his book to $130 an ounce? It would probably make him very much close to a half-billionaire, if not a billionaire, if that were to be achieved. And at $1,000 an ounce, well, Who knows? Why is the price of silver going up? What's behind the recent spike in the price of silver and robust silver price predictions? Several factors influence silver prices. Supply. Declines in mining have reduced silver supply in the face of rising demand since 2016. Prior to the pandemic, experts predicted silver mining to start increasing in 2020. However, precious metals mining ground to a halt during the shutdown, taking 2/3 of global silver output offline. Silver demand. As the global community grapples with the chaos and uncertainty of the pandemic, investors are turning to the safety of gold and silver. And then it moves on to stock market roller coaster. And finally, so far this year, gold and silver outperform the Dow and S&P. Investors often buy gold and silver to hedge against volatility and uncertainty in the equity markets. So, what conclusions can we draw from all of this? Well, first caveat, anything can happen. It's an election year in the United States, and the polls are currently showing President Trump is losing. Of course, that's no guarantee, but that's what they're showing. And he is a man who does not accept losing. And so, in our view, practically anything is possible on the political front. Who knows? Secondly, central banks and governments around the world are committed to bailing out their economies via money printing QE, financial stimulus measures, all of which serve to undermine respective currencies and create a huge fear of global inflation. Perhaps not now, but further down the road. And therefore, markets and investors will try and protect themselves against this. Thirdly, equity markets generally are not that far off all-time highs, and this is always a concerning area to be in, especially when earnings for most businesses do not truly reflect the high price-to-earnings ratios such companies currently command. The net result usually then will be a sell-off of those equities. Not necessarily this month or next month, but eventually when it is deemed that the price-to-earnings ratios are too high, investors will sell those shares. And these monies will eventually find another home, of which inevitably some, not all, but some, will move into precious metals. Fourthly, investment managers across the world, and now particularly in the West, are viewing gold and silver as a serious investment class, and as we reported many times last year, are beginning at last to recommend such holdings in a well-balanced portfolio. And fifthly, real interest rates are predicted to fall even further, and traditionally precious metal prices thrive in such an environment. And there are numerous other cases. There are, indeed, plenty of tailwinds for precious metal prices, and with silver standing only around 50% of its all-time high, it still has some quite considerable distance to go if it is to match its more wealthy cousin, gold. Now, in the current environment, while some pullbacks are indeed possible, if not likely, we would not be surprised to see silver reach $33 this year and possibly $35. However, we would be surprised if it reached $50 in 2020, though 21-22 would indeed be a distinct possibility in our view, especially as the industrial demand begins to pick up again, which is roughly at that time when we see this happening in earnest. $100 silver, perhaps by 2025, but before then, extremely unlikely, because as the silver price rises, those mines that were closed for uneconomic reasons now can be opened up, and the supply can start to increase again. But of course, if the coronavirus completely devastates nations around the world, or some international conflict is invoked, then we could see $100 silver, of course. and we could see $5,000 or $10,000 gold. But that would have to be not just a severe black swan, but perhaps quite a significant number of black swans. Now, gold could indeed reach $2,500 this year, and frankly we see that as more likely than silver reaching $50 in 2020. But, as we said earlier, and for the past 12 months, this is the decade for precious metal prices. The issue for most of us will be, is it going to be early 2020s or mid-2020s? And to be honest, only time will actually tell. We're of the view that the fair value of silver, demand versus supply, under normal conditions, would price silver somewhere in the region of $20 to $23 an ounce. However, we are not in normal times. There are many emotions running around, and many fears are emanating from central banks, governments, and investment managers themselves are now beginning to doubt even their belief that equities are the way to go. And this will prove beneficial without doubt for precious metal prices, as it probably will too for Bitcoin. And for those interested in that, keep an eye on it. That too could be a significant beneficiary from what is currently happening in the marketplace. We hope you find this useful. We would like to think that our original forecast would hold, but the environment has changed significantly. And therefore we have to move with that environment. That said, we're not in pumpered territory yet, and would be very surprised if the so-called pumpers achieve their goals, at least in the very near future. Thank you so much for listening. Please comment below and share your thoughts. They would indeed be most welcome. And if you haven't already done so, kindly subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.